and shift our view to the global markets then and get you the latest what's happening within China, because China's lithium-ion battery industry, which has proved the global EV boom for years now, is now entering a slower pace. Because after exceptionally strong growth through 2024 and 2025, battery demand is softening as domestic EV sales loom momentum, directly impacting the battery orders and factory utilization. This slowdown is largely policy-driven. EV purchases were front-loaded in 2025 as consumers rushed to take the advantage of the subsidies, tax exemptions and incentives. Now, as these benefits are scaled back, buyers are pausing. At the same time, battery makers expanded capacity aggressively, expecting continued hyper-growth, leaving the industry with excess supply as the demand normalizes. Now, this imbalance between supply and demand has pushed the battery prices sharply lower. Lithium-ion battery prices in China have fallen nearly 40 to 50% from the peak levels. While this helps reduce the EV costs globally, it has squeezed the margins for the manufacturers, especially those operating the newer plants with high fixed costs. Now, despite the slowdown, China continues to dominate the global battery manufacturing, of course, and exports to the Europe and parts of Asia are providing some support. Now, but the trade barriers and localization rules are limiting the growth in the markets like the US. Now, larger players are better positioned to absorb the pressure, while smaller and newer firms face tougher conditions. Now, industry watchers view this phase as a cyclical reset rather than just structural decline. But long-term drivers such as EV adoption, energy storage and renewable integration remain strong. But early 2026 will be likely about consolidation, tighter production planning and restoring the balance after years of rapid expansion. So that's the latest what's happening within China, because China EV battery demand seems to be slowing down, at least what the data is suggesting.